Welcome back to another episode. Today we're going to take a closer look at Nvidia, some recent updates impacting the overall stock. Even though the stock has been pretty much flat the past few days, I also want to take a closer look at another semiconductor giant that I own in my portfolio and I believe is still sitting at some attractive levels. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so let's start off with Nvidia. We can see the stock was down roughly 1.3% for the day. The stock has been pretty much flat for, I want to say, the past month or so. We can see the stock is up roughly 6.6% in the past 30 days. In the past 6 months, though, Nvidia continues to dominate, up over 154%. If I may be honest, I don't think we're going to hear anything anytime soon that would really drive the stock price. I think throughout the next few months until we get earnings, I believe later in August, Nvidia is going to be one of those stocks that we just have to keep building up the evidence of our bullish case. And that's what I've been doing pretty much throughout all these episodes, right? I don't believe any of the news that I'm going to come out with anytime soon or have come out in the past have given us anything to be, hey, look, this is going to rip the stock in the next few days. What I really am doing is creating that evidence that, hey, look, we are continuing to see that strong demand for their overall products, and will they be able to beat expectations for the upcoming quarter? We're also going to look at expectations in a bit. So the first thing I want to take a closer look at is a report that came out from Commercial Times, and they talked a little bit about the H200, the H100. So the H200 AI GPU entered mass production in quarter two. I'm pretty sure they're talking here about calendar year of quarter two, with large-scale delivers expected from quarter three onwards. So we know that H200 is the next iteration of the H100, where it's really focusing more on extra high bandwidth memory, which obviously helps with its inferencing and training solutions. Now, there are reports that those kind of AI server companies like Quanta, HPE, Supermicro, and Lenovo have reportedly listed the H200 products as ready for shipment, with deliveries anticipated to begin in the second half of the year. So pretty much in line with what we're seeing with the H200 right now, right? We've kind of heard a few reports. Yesterday, I think I covered a small data center company in Europe that the stock was up nearly 20% today, where they are just talking about buying and purchasing H200. So this is more evidence that the H200 is going to be a great product for Nvidia, as many investors might be worried that, hey, look, Jose, why companies are not going to buy the H200 as they wait for the Blackwell. And I don't think that's the case, right? My biggest reasoning there is right now the AI market is evolving at such a fast pace that you need the best of the best technology. Because if you kind of miss out on a generation, on an upgrade, you're going to miss out on speed, on training performance. And that could be the difference between why your AI product might be weaker than the competitors or might come out at a slower time than the competitors. Now, what we're also seeing that, hey, look, the report is citing that the pending orders are still largely focused on the H100 in the HGX architecture, with the H200 shares remaining limited. So this is one of the first times I believe we've heard in a while that, hey, look, the H100 still is seeing huge demand. Obviously, we've heard it from Nvidia during their earnings call, but I want to say this is probably the first time we've heard it from an actual report that, hey, look, the H100 is still very high demand with pending orders. They mentioned that, hey, look, starting quarter three, we're going to start to see huge growth of the DGX H200. And right now, even though we're a few quarters because away from the B100, the Blackwell architecture, there's already some visibility with shipments expected in the first half of next year. And I don't think that should be to anybody's surprise, right? We all know that all these clouding giants from Amazon, from Microsoft and Google are most likely going to purchase the B100. And if you're purchasing by large quantities, you need to put those orders ahead of time, because then Nvidia will be able to send them over to you and in the right order, right? So I'm not surprised that there's already some visibility with the B100. I've mentioned it in the past. I believe the Grace Blackwell, the GB200, is going to be NVIDIA's greatest product, but the Blackwell architecture is also pretty good with their B200 and their B100. But what I'm super, super excited is the Grace Blackwell, which is their CPU and GPU solution together. Now, in the same report, we are seeing that, hey, look, CoWoS production is increasing. And for those that are not familiar, CoWoS is the advanced packaging needed to make these chips. And that is on a supply constraint issue, and that's a capacity issue. So that's why the NVIDIA's AI chips are supply constrained. And even the H100, which has improved, can still reach about a 20-week lead time. And I think that is insane, right? Because the H100 is going to be, what, almost 2 years old already, and this product is still on a 20-week lead time. It just gets me even more and more excited about the H200, about the Blackwell, because we're continuing to see this almost uneased appetite for AI chips. Now, another thing that this article mentioned is that the H20, which is that chip that is tailored for the China market, has seen a demand in the Chinese market recently, where Nvidia had to secure a rush order for the H20 series. Now, this one also got me pretty excited because for me, I want to say the Chinese market was kind of dead, and maybe that might change in this upcoming quarter. And I believe this could be one of those things that can help the stock outperform guidance and outperform expectations. I believe pretty much like many other, I believe many other analysts, pretty much like myself, have kind of thrown away the Chinese market, at least for the AI space, in forms of data center solutions. But this article is saying that, hey, look, there's some hope here. And I think that could be a major, major, major green flag for the stock on earnings later in August.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
Now, kind of talking back to Nvidia and the GPU market, Lambda seeks another $800 million in funding for GPU cloud. So for those that are not familiar with Lambda, Lambda is kind of a clouding infrastructure. They pretty much have a clouding infrastructure solution mainly meant for the AI market. They have on-demand NVIDIA GPU instances and clusters for AI training and inferencing. They have the H100s. I'm gonna sure that they're gonna have things like the H200 and all those other solutions as well. Now, with this funding, it brings a lot of bullish cases for NVIDIA, in my opinion. The first thing is there's money out there for the AI space, because this is not going to be the first time they're funding. So there's a lot of money going out there for the AI market. The second thing is, hey, look, if they're looking for funding, they're most likely going to be purchasing NVIDIA GPUs to expand their infrastructure. And these small data center companies and these small clouding companies are going to be buying a few thousands of NVIDIA GPUs throughout the year. I mean, like I mentioned yesterday, we talked about that European company that is buying a few thousand. Imagine a lot of small clouding companies just buying a few thousand here and there. That's a lot of revenue coming in for NVIDIA. Now, kind of the final thing I want to take a closer look at in forms of NVIDIA before we look at some numbers is there was a tweet by Elon Musk a few days ago, July 1st, so yesterday, that Grok 3 end of year will be coming. For those not familiar, Grok is XAI, or Twitter's AI chatbot. Right now, we are in Grok version 1. Grok 2 is expected to come out here in August, and Grok 3 is expected to come out later this year after training on 100,000 H100 GPUs. So we already know that, hey, look, NVIDIA has provided a nice amount of GPUs for XAI. They have their 100K AI data center being built. It still boggles my mind that there are data centers out right there, supercomputers for AI, that are being built for 100,000. I mean, XAI is not the biggest AI company, so imagine all these other ones. I mean, just to kind of think about that, let's just say 100,000 GPUs times, let's say, the average price of $30,000, right? There might be more. That's about $3 billion in revenue just on GPUs alone. And then we know on forms of AI software side, Nvidia charges $5,000 per year for the GPU architecture and those NVIDIA AI software enterprise solution. So now 5,000 times 100,000, that's about 500 million. So $500 million just on the GPU reoccurring revenue. I think this is where Nvidia is gonna make a lot of money too. It's gonna be that reoccurring revenue coming from the GPU side, focusing on improving obviously their software solution, but we know that's gonna be a high margin area from them. And this is from one data center. Like I mentioned, xAI is not the biggest. OpenAI has their own. We have other big companies are creating their own AI solutions as well. So I think NVIDIA's software market is going to continue to grow at such a healthy pace. So this is something that I haven't really talked about in the past, but I think I just want to bring those numbers up to you, the viewers. Next, we do want to I want to take a closer look at the expected guidance for NVIDIA's revenue, just to bring up to date where we're at, even though we just had earnings a few months ago. Earnings are going to come back on August 20 something. Hopefully it's August 29th. August 29th is my birthday. If it is, that would be a great birthday gift. But Nvidia mentioned in their most recent quarter that, hey, look, revenue is expected to be roughly $28 billion, right? $28 billion would be about a $2 billion growth from quarter one, which was their most recent quarter. And it would be nearly a $15 billion growth, over 100% versus a year ago. So we are starting to see that, hey, year over year growth is still in the triple digits, but I believe we are going to start to see, at least for now, maybe those quarter over quarter jumps not be as high as they used to be. I think that's okay. It's nothing crazy, in my opinion. Analysts expect that revenue for this current quarter will be roughly $28.3 billion. So we can see analysts are pretty much in line with what Nvidia mentioned. With everything that we're looking, I think Nvidia is going to blow revenue estimates off the water, especially if they are really seeing that growth in the H20, which is the AI chip for China, which we talked about earlier this in this episode. So I think right now, based on what analysts are expecting, Nvidia's revenue will be estimates. And for me, Nvidia right now is definitely not a time for me to be buying accumulation phase. But Nvidia, I think, has the opportunity to do really well after earnings. I believe maybe the jumps that we have seen in the past aren't going to be the same jumps we continue to see, but there's definitely growth opportunity for the company. Now, if we take a closer look, PE ratio forward 1 year for Nvidia is roughly 34. I want to say if this ever drops to maybe below 30s for forward 1 year, that's when I think it's a nice time to dollar cost average for Nvidia. So just my overall thoughts there. The final thing I wanted to talk about is that company that I believe is sitting at an attractive price, AMD. I mentioned that AMD anywhere below 160 or near the 160 is at attractive price. We can see the stock was up roughly 4.2%, sitting at 164. I'm going to guess, depending on the market, we can definitely see below that 160 levels. I think if we continue to get those levels, those are definitely great buying opportunities. AMD used to be my number 2 position, but it was just overthrown by Tesla. I might do a video later on. Obviously, Tesla has had a great few days, and now Tesla is my number 2 position. So AMD's forward PE ratio for 1 year sitting at 29.5. Like I mentioned, I mentioned in previous episodes, I don't think AMD is the next Nvidia. So don't get it twisted. Don't get it wrong. I don't believe AMD is going to be a $1 trillion company. I don't think it has that in it right now, but I do believe AMD will definitely benefit from the AI space, and analysts are right now really underestimating its performance. So for me, AMD is still a buy at these levels. I really like it below 160. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.